Are you aware of the shifting tides in market sentiment that could impact your investments?
That's right. Join top analysts Emily Brown and David Lin as they decode the latest financial trends and economic shifts.
In this video, we've distilled their expert insights into bite-sized summaries using advanced AI technology.
So buckle up. Emily Brown begins with critical insights on the changing market signals for traders.
And stick around, because later, David Lin dives into what the United States can learn from its neighbors' economic troubles. Today, we're discussing market sentiments highlighted by Emily Brown, emphasizing their importance for traders.
Emily emphasizes that traders need to be aware of the changing signals in the market.
Emily Brown suggests that recent economic data indicates increasing uncertainty among traders.
David Lin adds that this uncertainty could result in heightened volatility in the markets. Emily warns that with increasing market volatility, traders may need to rethink their strategies.
This aligns with David Lin's view that responding to market signals is crucial for trading success. Emily explains that economic data directly influences market confidence.
David supports this notion, noting that traders adjust their strategies based on the data.
What does Emily Brown foresee for traders as market sentiment shifts?
Emily suggests that traders need to remain flexible to navigate expected fluctuations.
Emily concludes that traders must remain vigilant regarding economic indicators.
David highlights the necessity of adaptability in trading strategies during shifts in market sentiment.
Today, we explore a critical analysis by economist Emily Brown regarding the alarming economic conditions in Canada and Mexico.
Emily highlights how these developments could serve as a warning for the United States.
Emily Brown emphasizes that the economic collapse faced by Canada and Mexico is a significant warning indicator for the United States.
According to David Lin, the interconnected nature of these economies highlights potential risks for United States markets.
How does Emily Brown assess the risks posed by Canada's and Mexico's economic challenges?
Emily notes that downturns in these countries can significantly disrupt United States supply chains and economic activities.
David Lin elaborates on the dangers of economic interdependence.
He points out that the United States relies profoundly on trade with both Canada and Mexico, making it vulnerable to their economic downturns.
What does Emily Brown predict could happen if these trends continue?
Emily anticipates that sustained economic issues in Canada and Mexico may push the United States closer to recession.
In summary, Emily Brown stresses the importance of closely monitoring the economic situations in Canada and Mexico.
David Lin suggests that this could be an opportunity for investors to adjust their strategies.
Today, we're analyzing insights on the anticipated market pullback, especially focusing on the technology and semiconductor sectors.
Jeremy indicates that recent fluctuations have raised concerns over ongoing volatility in technology stocks.
Key indicators suggest a pullback in the market is on the horizon.
Increased volatility among technology stocks is raising concerns. Semiconductor stocks are facing major losses attributed to ongoing supply chain issues and fluctuating demand.
These factors contribute significantly to overall market instability.
Tesla's stock has seen increased volatility, especially reacting to news.
Such fluctuations challenge investors looking for stability. Investor sentiment is turning cautious as volatility rises.
Are there specific indicators investors should watch?
Monitoring economic indicators is essential for decision-making.
The market could experience a pullback of 10 to 20% in technology stocks.
And volatility is expected to continue until confidence is restored.
Investors should prepare for ongoing market volatility and potential pullbacks.
Diversifying portfolios and monitoring economic indicators are essential strategies.
In this analysis, we explore insights from Reventure Consulting regarding expected Federal Reserve rate cuts and their implications for home prices in 2025 and 2026.
Reventure Consulting suggests these cuts may ease conditions for home buyers and invigorate the housing sector.
Reventure Consulting's projections highlight that the Federal Reserve's rate cuts could significantly stimulate the economy.
These reductions in rates are likely to lower the cost of mortgages, making homes more affordable for buyers.
What does Reventure Consulting suggest about the potential impact of the Federal Reserve's decisions on home prices.
They argue that as mortgage rates drop, demand is likely to rise, which could also push home prices upwards.
Reventure Consulting presents a long-term forecast indicating steady growth in home values by 2026.
However, they emphasize that this growth can be affected by changing economic conditions and buyer confidence.
What predictions does Reventure Consulting make regarding home prices in the coming years?
They forecast an average rise of home prices by approximately 10 to 15% by 2026, depending on economic conditions.
Reventure Consulting advises prospective buyers to stay informed on market conditions as price hikes are anticipated alongside Federal Reserve rate cuts.
Keeping a close eye on announcements from the Federal Reserve will be crucial in identifying advantageous buying moments.
Today, we are examining the tragic Texas flash flood incident.
This analysis reflects on how communities respond to such devastating events.
The Texas flash flood brought not just property damage, but also potential humanitarian crises.
Preparation and swift action are crucial in minimizing the impact of such natural disasters. Preparedness plays a crucial role in saving lives during emergencies.
Effective communication and resources are pivotal for helping those in urgent need. Community resources and support networks are crucial in the aftermath of disasters.
These networks assist families and foster resilience.
Looking forward, it's crucial that communities adopt improved strategies for handling potential flash floods.
There will be a continued emphasis on community involvement in disaster preparedness initiatives.
In conclusion, community preparedness can drastically reduce the risks during flooding events.
Furthermore, continuous support systems are essential for helping families navigate the aftermath of disasters.
Today, we're exploring an analysis by Mike Green concerning the shifting dynamics of passive capital flows.
Mike's insights describe how these trends could impact both market volatility and how investors position their strategies.
Mike Green emphasizes the role of passive capital flows, noting their shift may indicate increased market volatility.
He points out that modifications in passive investing strategies might fundamentally alter market dynamics. Mike notes that as passive capital flows weaken, we may face increased market volatility.
That's a critical concern. Should investors be more cautious at this point?
Absolutely. Mike advises that investors need to brace for possible down stemming from these trends.
What does Mike recommend regarding investor strategies?
He suggests that investors need to reconsider their strategies in light of the evolving capital flows.
So the emphasis is on being proactive right now.
Yes, Mike stresses that timely and thoughtful adjustments are essential for keeping portfolios strong.
What forecasts does Mike offer for the future?
Mike expects that ongoing declines in passive capital flows could lead to prolonged market instability.
And what will this mean for investor sentiment?
He believes investor sentiment will play a critical role in shaping future market outcomes.
In conclusion, Mike encourages investors to keep a close eye on changes in passive capital flows to guide their strategies.
He also advocates for more active investment strategies to navigate potential market volatility.
So, it's about remaining vigilant and strategic during these unpredictable times.
Exactly. Quick adaptation will be key to successfully managing the shifting market landscape.
Wow, what an insightful discussion we've had today.
Absolutely. Each guest brought something unique to the table, from Mike Green's focus on passive capital flows to Emily Brown's macroeconomic warnings.
It's fascinating that they all agree on the need to monitor these trends closely.
Right? But I found the disagreement particularly interesting. Mike sees the impact of capital flows, while Reventure is all about interest rates in the housing sector.
And let's not forget Jeremy Lee pointing to the volatility in tech stocks as a current challenge.
Exactly. These various insights really paint a complex picture of our economic landscape.
If you found value in today's video, be sure to like and subscribe.
Your support is crucial for us to continue delivering expert analyses like this. Plus, you don't want to miss our next deep dive.
Next up, we'll be exploring how global trade dynamics affect markets. Definitely stay tuned.